Hi everyone, check the pinned comment as I have very exciting news to share with you today, and let's go over my Elliott Wave analysis, bullish and bearish on Bitcoin, starting with 3 bullish Elliott Wave scenarios, where the first one is a double 1, 2 over here, where in green we're looking for a 1, 2, 3, 4, 5, and then inside the third wave we have the blue count, which then is a lower degree count for a 1, 2, 3, 4, 5. Now preferably in a double 1, 2 scenario, the second wave one, as it is a lower degree count compared to the first wave one, the second wave one is most commonly shorter in both time and price compared to the first wave one. However, if we zoom in, you can see that this second wave one is actually a little bit longer than the first wave one, with the trend-based fib taken from the low to the high of 1 to the low of 2 to compare the length in price of this wave one with this move to the upside, which is definitely not preferred and also lowers the probabilities for a double 1, 2. Now another scenario over here is a contracting diagonal, where each wave can be a 3-wave structure in zigzag, so 3, 3, 3, 3, and then a final 3, or it's a 5, 3, 5, 3, 5-wave move. But also in a contracting diagonal, you don't want to see the 1-to-1 being hit, which, as I've just shown you, has been hit over here, because in a contracting diagonal, wave 3 is not allowed to be longer than wave 1. Another option is then an expanding diagonal, something like this, but that is extremely rare and never preferred. Then finally, we have a regular impulsive structure, where we then have a simple wave 1, then a wave 2, looking for a bigger 3 to the upside, or 3 is potentially already finished. But the problem with 3 already being finished is that now there's overlap between 1 and 4, which is not allowed in a regular impulse. We then have to think about diagonals, but as just mentioned, a diagonal is unlikely as well. So that is also not really on the card. So therefore, if we are looking for a bullish scenario, this wave 3 should not yet be in, and we want to see really bullish continuation, as a wave 3 should be the highest impulsive move, highest volume, most impulsive move towards the upside, where usually the 1.618 is a minimum target for wave 3, which is sitting at 30.4k, which means it does have to go through a couple of resistance areas. Most important, between 29.1k and 29.4k is a big resistance area, and then a small one here between 29.7 and 29.8k. If you then look at the CVD divergences, then what's interesting is that at the low over here, if we are looking for a big impulsive move towards the upside for new highs to be made, price over here did not make any bullish CVD divergences with this low and the higher low. Higher low in price, lower low in CVD was not visible. And if I show you this on the chart over here, we go to the 1 hour time frame and I zoom out, then over here you can see a higher low in price, but not a lower low in yellow, neither a lower low on blue. So there's no bullish divergences with this low, which is usually something that I really want to see if we're looking for a 1, 2, and eventually a bigger 3 towards the upside. So this also doesn't really support the bullish scenarios, which in general have a bit of a lower probability as they don't look that nice. And therefore, we also then look at the bearish scenarios, right? With an ABC 535 to the downside, where this move to the upside is part of a corrective 3-wave structure in wave B, where for a wave B, the 05 to the 886 is a common target for then still a wave C to the downside, where you expect at least a double bottom over here to be taken, low number 1, low number 2. It's like a magnet for price at 24.7k. Also, Bybit already took this low, which increases the probabilities other charts will follow, and the Bybit wick went to 23.6k, which for me is a minimum target, because if we look towards the downside over here, then the target box, the first area of support really I have, is between 21.8k and 22.6k, and that is actually quite interesting also when we open this volume profile. So this volume profile over here is a volume profile taken from this range, and you can see that the value area high has now been tested twice. So you can imagine if price is going to go to the downside, take the double bottom. Well, if we take the double bottom, move into the value area, maybe a bit of a retest, then the first target to the downside is the point of control, 23k, and the second one is the value area low at 21.9k. Then we have over here psychology scenarios, which are interesting in general, because a psychology scenario is a scenario based on what beginning traders learn, meaning we have trend lines and patterns. That's usually the first thing you learn. That's the first thing that I've learned when I started. But that also means that many people are looking at the trend lines and they are looking at the patterns, but not everyone is winning in the market. So a psychology scenario is a scenario where people usually get wrecked eventually. So over here we then have a trend line taken from this high to this high and then extended. And one of the scenarios I had on my chart where we were ranging here is breaking out of the trend line but eventually moving down, because if the trend line is broken over here, you could say even back tested on the 12-hour, then you have the breakout longers over here with probably the stop loss down here or maybe even here, looking for a move to the upside where they expect at least this high to be taken. However, in this scenario, we do not expect new highs, but we expect price to turn around to the downside. And in combination with Elliott waves and the bullish scenarios I just mentioned over here, probabilities are still higher for that move to the downside. And if price does move to the downside, then of course what we will see all across the internet is this head and shoulders pattern. Shoulder 1, shoulder 2, and the head in the middle. Now a target for a head and shoulders pattern is calculated by taking a straight line from the high to the neckline and then putting this straight line to the downside where the high will then be on the neckline, and then tada, you have your target, with the target being 17.7k. However, in this particular scenario, what I would like to see is not this target to be hit, but move to the downside. People looking for downside here, looking for that target, breakout shorter, shorting here, stop loss above and whatever not. But then instead of going all the way down, price moving down, yes, possible, but then moving to the upside before the target of this psychology scenario, the head and shoulders scenario, is hit. Now this then leads us to the probabilities, which on this medium time frame, the 12-hour daily time frame, is still higher for price to move to the downside. I explained the different bullish scenario, double 1-2 not looking nice, second wave 1 is longer than the first one, diagonal contracting invalidated because the 1-to-1 has been tagged, expanding diagonals are very rare, and for a regular impulse, if this is the high of 3 and this is 4, well that's invalidated, so you want to see this 3 continue for way more upside, but at the moment it doesn't look too nice for an impulsive structure inside wave 3, with the 1.618 usually a minimum target at 30.4k, increasing the probabilities for the bearish scenarios, also because we didn't see any bullish CVD divergences here between this low and the higher low, so therefore the probabilities are higher that we still get a move to the downside, including the theory about this low being taken, the double bottom, and Bybit with a very big wick. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, and for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.